What's up, everyone? It's Caddy with Money Vesting. So thank you so much for joining in. We've got a really interesting day ahead with the Federal Reserve Chairman Jerome Powell's speech coming up at 10 a.m. Eastern. If you guys can hear me, if you guys can see me, just let me know in the live chat and we should be all set. Just want to make sure that there are no technical difficulties and we should be good. So just give me a thumbs up in the live chat if you guys can see me, if everything's working according to the plan. So we should be all set. The markets here, we got the NASDAQ up a little bit over 35 basis points, so we are pushing higher. And we got the S&P 500 ETF also up over 30 basis points, so SPY is also up. Not a lot of volume on the Dow Jones ETF, but still up over 24 basis points as well. Perfect. So thank you so much, Matt. Welcome on board. Josh, Jimmy, Carl, Mushtaq, Paul, Maihan, thank you so much for joining in. So all right, we're just gonna make a test here. Just want to make sure that you guys can actually hear this. So I will play the actual sort of Bloomberg TV and just want to make sure that you guys can hear that as well and see it on the screen in a little bit. But we got the VIX down over 5% right now, trading under 18 levels once again. So we are coming down. Yesterday we were up over 12%, so we did push up to a little bit over 19.27, and now we are starting to come back down even further. So Mark, yeah, I can go over RPHM as well. Just got to go over some of the other macro stuff, go over the broader markets, indices, individual stocks a little bit, and then we'll kind of go over some individual companies that you guys are recommending. So what time is Powell speaking? He's going to be talking at 10 a.m. Eastern. This right here is going to be the agenda that was actually released by the Kansas City Fed. So 9 a.m., 12 p.m. So 9 a.m. is basically, this is Central Time. So Eastern is going to be 10 a.m. Welcome and opening remarks, and then we got Jerome Powell over here, Chair, who's going to be talking about, with the central bankers as well, Board of Governors of the Federal Reserve System that are going to be talking. So very interesting. Again, I'm not expecting like a huge policy change from the markets. I'm not expecting for Jerome Powell to basically take the lead and start telling us the taper timeline, but just I'm more interested in what his take is on the current economic data, right? More interested in learning more about what he thinks about the recent unemployment numbers, since we have been coming down and those other category numbers have been improving over time, and what his take is on inflation. We also got the PCE number, the personal consumption expenditure, so I will go over that in just a minute as well. I'll just let everybody kind of settle in and come to the live stream, so we'll just start going over some of the presentation as well. So again, the agenda over here, Jerome Powell is talking at 10 a.m. Eastern, 9 a.m. Central, and we will be going over that in just a second. So just let me know if you guys can hear this, all right?
Panels today, as we are 1 hour away from a widely anticipated speech by the chairman of the Federal Reserve System. Here's what we're going to do for you on radio and TV, and please stay with us through the entire hour because we've lined up wonderful conversation here. Michael McKee.
All right, perfect. Good. We should be all set. Again, we got about an hour left for that speech to actually start. At 9:30, of course, the markets are going to open. But before that, let's just go over the Fed's favorite inflation gauge is out at 8:30 a.m. Eastern. Economists expect the July personal consumption expenditure, so that's the PCE index. That's really what the Fed focuses on, and not the CPI, not the PPI. They do look at it, but for the most part, they're more interested in PCE. And they were expecting that to increase by 3.6% year over year, so that's the analyzed growth for the personal consumption expenditure, and basically going up same amount as the prior month, so month over month, pretty much flat. Rising inflation has been a concern in the markets. Powell has said in the past that while prices pressures are mounting, they're transitory. A number of Fed officials speak Friday before and after Powell's 10 a.m. Eastern speech as well. So this right here is going to be the actual personal income and outlays. So you'll notice that this actually came out 8:27. So today at 8:30 a.m. Eastern, just about 30 minutes ago, for the month of July, right? So we're again, all the economic data that comes out, we're backward looking. So we're looking in the previous month and what that data was. So personal income month over month actually increased more than the expectations, right? We were basically, the consensus was 30 basis points. We actually went up 1.1%. This makes sense because, as I said, the labor market has been improving, right? The unemployment rate's been coming down, so more and more people are actually going back into the workforce. So it's no surprise that personal income is now starting to push higher month over month as well. So that is very interesting. And then if you take a look at the personal consumption expenditure month over month, 50 basis points was the consensus, and 30 basis points is where we landed, right? So we basically increased by 30 basis points, a little bit lower than what the consensus was. So people spending a little bit less money in the month of July. And that also makes sense, right? Because inflation has basically stabilized a little bit, so it hasn't really gone up all that much. It's still up from year over year. We're pretty much flat, but if you were to compare that with the previous month when we jumped over 90 basis points, that's a significant pullback as well. All right, let's see here 1 second. All right, so core PCE, that's the core personal consumption expenditure, basically rules out specific items. You'll notice that month over month, we were pretty aligned with what the expectation was, 30 basis points and 3.6% annualized year over year core PCE, very aligned with the actual consensus as well. So those right there are the numbers. And again, I will be going over. So men, I will go over gold. Yes, if you stop spamming, maybe I will go over that for you. But first, like I said, we have some stuff to cover, and then we'll go over individual analysis as well. All right, so thank you so much for that. All right, so moving forward, US oil prices also have been pushing higher. So over the last few weeks, you'll notice that energy prices were down. That's actually one of the worst performing sectors in the last month, but recently they have seen a recovery. So they are on track for a strong weekly gain. So Chevron, Exxon have really done well. And basically rose 2% early Friday on concerns about near-term supply disruptions as energy companies began shutting down production in the Gulf of Mexico ahead of a potential hurricane as well. And of course, the Gulf of Mexico offshore wells account for 17% of the U.S. crude oil production. More than 45% of the total U.S. refining capacity lies alongside the Gulf as well. So we're seeing a little bit of a push higher. Because of that, COVID cases basically are still on the rise, climbing to their highest level since January to a 7-day average of nearly 156,000. That's still a 10% increase from the prior week as well. So earnings, there's some earnings that are coming out or basically came out this pre-market and yesterday after the markets closed. So Gap basically adjusted quarterly earnings of 70 cents per share, beating the 46 cents estimate, and the stock rallied 8.5% pre-market. So let's take a quick look here. On Gap, I think the ticker is GPS. So up over 6.7%, now starting to see a little bit of pullback on this. We have a support at close to $26.40, right? So this right here is going to be the level to watch, and now we're seeing a little bit of a push higher from those levels on these strong earnings numbers as well. Big Lots basically dropped over 9.5% in pre-market trading after it missed top and bottom line estimates for its latest quarter. Earned about $1.09 per share, 3 cents shy of analyst forecasts, and comparable store sales also slid greater than expected, 13.2%. That's a pretty steep number there. And the company said that it was also hit by supply chain issues and inflation pressures as well. So BIG. So Big Lots, let's take a quick look. Down over 14% pre-market. That's a pretty steep pullback here. But anyone who is actually trading or investing in this, the next support technical level to watch is going to be around this $41, $42 level per share. So tapering already known, but when will be more important, I think. Yes, that is true. So taper timeline is what we're really looking forward to. We know that's going to happen, but when that's going to happen is the real question moving forward. All right, so let's take a look here. So HP beat estimates by 16 cents with adjusted quarterly earnings of $1 per share. All the revenue fell below analyst forecast. The personal consumer printer maker saw the worldwide chip shortage hurt its ability to meet demand, and they were down 4.6% pre-market. This is actually a company that I am looking into. I will be kind of doing some analysis on this because it has been brought up to my attention by a few of our members. So I will be looking into this. Although like the pattern has been very, very downtrending for years. For this one, it's just been selling off over the last 6 years, 7 years. It's been on a downtrending pattern, but nonetheless pretty much flat so far pre-market. Dell also reported adjusted quarterly earnings $2.24 per share, 21 cents above estimates, with revenue also topping analyst projections. Basically fell 1.8%. Right now, Workday earned an adjusted $1.23 per share for its latest quarter. Basically was up over 7% pre-market. And Marvel Technology came in 3 cents above estimates with an adjusted quarterly profit of 34 cents. Chipmakers revenue merely matched street forecasts, and the cost of goods also jumped for the year. They were basically down 3.6. VMware, this is another stock that I'm watching very, very closely. So VMW, they're basically down over 5% right now, but this is going to be on my watch list for some additional analysis as well. But in terms of earnings, they basically came in at $1.75 per share, beating $1.64 consensus estimate. While the enterprise software company's revenue is slightly above Wall Street's forecast, the cloud business revenue did fall short of some analyst forecasts as well. All right, so that's all I have for you guys so far. But let's take a quick look in the markets, and then we'll kind of go over some individual companies as well. So Nasdaq's still up, and SPY is also up pre-market, and so is the Dow. Kind of basically recovering after yesterday's sell-off. So Nasdaq was down over 0.5%. We got the SPY down over 60, and the Dow Jones also down over 57 basis points as well. So Uncle Powell, Yes, he is going to be talking today at 10 a.m. Eastern. So again, it's going to be about 52 minutes here. So this is not interactive broker charts. This is TradingView. TradingView, you guys can check it out if you want to. The link is going to be down. It should be down in the description below as well. But this is the software that I utilize to basically look at all the charts and do a lot of technical analysis as well. All right. So is TradingView Financials reliable? Do you only use them as a source? I saw that their free cash flow for Google is different from your presentation on Google. Yeah, I mean, TradingView Financials, I wouldn't definitely have a second look at something else. I think Seeking Alpha is really good, but the best source that you can go to is the actual annual and quarterly reports for the company from the SEC website or the company's website itself. So that's something that you can consider. But TradingView, I wouldn't trust it with the fundamentals. They've also been very inaccurate sometimes about the actual earnings date. For fundamental analysis, of course, I definitely go to another source, but from technical analysis standpoint, this is the best platform that I've ever used. All right, so let's see. I hate Walgreens. 4 trades until now in the summer, all down, not a single hour green every single trade, always red from the first minute until. So Max, all right, let's take a look at Walgreens. So Walgreens, again, this is not a trade for me. It's more of a longer term position. So this is a stock that I've been buying recently. You do have a plan on establishing a bigger position in this. So $46 is going to be the next support level to watch. $46.30, closer to this level right here, is going to be the next level of support and an area of demand to watch for Walgreens. But again, 4% dividend yield with a capital appreciation potential with a new CEO, with the innovation, and of course with the digital transformation as well. It's got a lot of potential to turn around the revenues as well. So I think it's got a lot of potential in the future, and in my opinion, this is not a trade, so to speak, but more of like a position that I'm building for the next 3 to 4 years as well. So SPRT was up over 60%. Doesn't necessarily want to go over that stock because I feel like there was a momentum catalyst here. But definitely, I mean, it's pushing up over 122%. A lot of momentum for this stock. Very, very overbought. The RSI is way too overbought. The MACD is way too overbought. So there's not really much opportunity here, in my opinion, for this stock. At least not as a long-term play or like a swing trading play either. So there's definitely plenty of risk with very little upside, in my opinion. But congrats to everyone who got in early, right? Definitely 122% gain is very, very solid in one day. All right, let's take a look at CPNG. So Coupang, all right. And then we'll go over Palantir here in just a second. So Coupang, also one of the Korean companies, been selling off since its IPO. It just feels almost because of the regulations and the investigations and all that that's going on over in China and in the Southeast Asia as well, is one of the reasons why this could also be getting hurt. But I haven't done any fundamental analysis on it. But this right here is going to be a support at close to $30 per share for Coupang. The resistance for this is going to be at closer to right here, the $41.50, $42 level. Also, Korea also increased rates a lot. That's great to know. Thank you so much for sharing that. So yeah, that could also be one of the reasons why we're also seeing a little bit of a quantitative tightening as well. So $41.50 is going to be the resistance here, previous support, and $30, $31 is going to be the next support level to watch as well. All right, let's go over Palantir. So Palantir up a little bit over 1.2%. It's just been consolidating, right? So the one thing that I really like about Palantir right now is the fact that we've established a new base, or so to speak, like a new area of demand. The valuation was rich. What I do expect from Palantir over the long term right now, at least in the short term to medium term. Long term, I do have a price target of well over $50 on the stock, but in the short to medium term, I do expect Palantir to basically start trading sideways, basically consolidate a little bit until we basically get those contracts with the U.S. government, more contracts, and of course commercial clients as well as they continue to kind of expand their ecosystem. That's going to be very important, and we get to learn more about their future earnings as well. So all that I think will play a big role over the longer term picture, but in the short term, I wouldn't be surprised if we continue to see some more consolidation sideways, which is good, which gives us the opportunity to kind of accumulate more at support levels at discounted prices, because the long-term story is still intact in Palantir, right? $50 billion right now. I easily see this being a $100 billion company as well. So I love Thinkorswim, little heavyweight. Yeah, so Thinkorswim does have a lot of features, but one thing that I actually do like about TradingView a lot is that the fact that you can basically do a lot of things, that you can create your own indices, you can create a lot of things, as opposed to TradingView, you can only look at data and research platform, right? So with TradingView, we also have our very own indexes. So if you come over to my watch list, which should be here somewhere, let's see. Relative performance, live stream index, not this one. Let's take a look at alternatives, because I do remember creating some indices for individual stocks as well, right? But nonetheless, you can actually, oh, there it is, sector indices. So if you come over to sector indices, these right here, you can actually create your own indices over here. So what I've really done here is I've taken like a relative performance chart of all big tech companies. So we've got Facebook, Apple, Amazon, Netflix, Google, Microsoft, Tesla, divided by NDX, that's the NASDAQ, to really plot whether we're outperforming or underperforming the NASDAQ index. And for the most part, this index is just traded sideways. Very similar to that, this right here is going to be the healthcare index that I've created for all the other sectors. And you'll notice that this has been a strong uptrend for healthcare, but recently we've just started to pull back a little bit, down over 3.7%. So this is some of the features that I really like about TradingView at the moment. Let's take a look at Baba. So Alibaba here, slightly down over 3%, right? The last time I checked, down about 2.7% for this company. So again, strong momentum to the downside since the beginning of this year, and even coming in from last year. And it's always like for Alibaba, it's been like we take one step forward and then two steps back, right? Every time we see those rallies, like 2 to 3 different green days, there's a little ray of hope, and then all of a sudden it gets wiped out in the next few days, right? It's always been one step forward, two steps back, unfortunately, for Alibaba. But the last couple of days, I should say, like they were really good. 6% jump here. The day before that, it was almost 2%, but unfortunately, we're back down to 160. The support I have is going to be at $148 per share on Alibaba stock, and 161 is the next sort of resistance. So I'll go ahead and turn this level into resistance. The problem with Alibaba right now is that even though it's undervalued, even though this is a very, very attractive price, there's no telling when all of this is going to end. That's the uncertainty, right? Even if you do start establishing a position, which even at 160, Alibaba is way too undervalued, right? It's way too undervalued. It's way at an attractive price. Ranjit says the relative indices is possible in Thinkorswim. Oh, really? So, like, can you create those, or is it like already pre-existing ones? Can you actually like create the indexes? Like you can add and subtract and divide and different sort of stocks from the index, or is it like predetermined already the ones that are there that you can utilize? So for Alibaba, like I said, there's no saying as to when this is all going to end, right? It could very well just continue to dip further and come to even more of an attractive price, right? So that right there is going to be very, very important for us to watch. All right, finally I figured this out. Finally. Kathy needs to let go of Chinese stocks. Yeah, so I mean, she was, she was selling earlier and now she's buying back in. So yeah, I don't know if I completely agree with the decisions that she made, but it's just been a lot of back and forth, right? It's just been a lot of back and forth. Like it seems like she can't really make a decision on Chinese companies. So I was like very surprised that she basically bought earlier. She didn't dollar cost average like she was doing with other stocks, and then she sold, drastically brought those positions down in terms of allocation, and now she bought back in, right? So it was very, very interesting. By the way, something completely off topic, completely off the stock market here. I don't know if anybody's following up with like football or soccer, but what do you guys think about Ronaldo? I just learned about it this morning when I was actually just reading the news, and that popped up, and I was like so surprised. I was so shocked. But yeah, if anybody is interested in talking about that, I can talk about those all day as well. All right, so Ranjit says we can create that. So okay, that's good. That's good. That's great. So yeah, Luke says crazy short on Juventus. Yeah, I mean he just straight up left, right? He just straight up left. He just cleared his locker room and he just apparently he took a plane and just left. He's no longer at Juventus. So, we'll see where he ends up because the window closes on Tuesday. So we've only got about 5 days left for the transfer window. And apparently City is making an offer. I as a United fan, I definitely don't want him to go to City, but it is what it is, PSG should have made an offer for him, but PSG never. I think they dismissed the possibility of Messi and Ronaldo playing together. But all right, so the markets are starting to pull back a little bit here. So Nasdaq still up over 22, but we are seeing a bit of a pullback. Not to mention the VIX still pretty much down over 4% here. Let's talk about Ethereum and Bitcoin. So Ethereum, the one thing that concerns me the most about this is the negative divergence, right? I mean, this is just a really strong move to the downside, lower highs for the relative strength index, and of course the price itself, it just continues to make these higher highs, even so much so that it's just trading sideways. So the good thing is that we're just trading above support level, right? Support for Ethereum is roughly between $2,800 to $3,000. But the R side just continues to make these lower highs, right? So Luke, Fed's Messer says the Fed has met the criteria on the macro side for tapering. That's why I pull back. Fed's Messer. Okay. Yeah, I mean, for them, for tapering, I think the biggest sort of metric or the indicator for them is the jobs report and the labor market. And that's really what I'm really interested in is what Jerome Powell says about those reports, right? What is his take on the overall employment in the United States right now? And if he still basically tells, whether there's still more work to be done and there's still substantial further progress to be made, or if you're already there and we're going to start tapering very soon. So that's going to be the big sort of taper timeline catalyst that's going to possibly move the markets. So that's Ethereum, negative divergence to watch very closely and observe. Resistance, again, 3,300. Support at close to 2,800 to as high as $3,000. Let's take a look at Bitcoin. Just over 47,000. Not as bad as what we've seen for Ethereum, but still some type of a bearish divergence here for Bitcoin as well. And the interesting thing is that we saw a very similar pattern for Bitcoin back when it started crashing. So you'll notice that this right here were the lower highs for Bitcoin, and this is coming in from January 8th all the way till April 12th. So that right there is the negative divergence as we continue to make these higher highs, right? So hopefully you guys can see that, and you'll notice that Bitcoin price makes these new all-time highs at 65,000, while the R side is making these lower highs. And then when finally the R side cracked, we saw Bitcoin prices basically pull back over 54%. So it's almost not quite at the scale as what we saw earlier, but almost an identical pattern here forming even further. So, all right, let's take a look at. So it's interesting that the market is generally up with all the FUD going on, Afghanistan, inflation taper, and etc. Yeah, I mean, that is very, very true, and the market remains very, very resilient, right? I mean, the S&P 500 just does not care, literally does not care what's going on in the world, and just continues to push higher. What are your favorite and most effective indicators to use on a daily basis? That's actually a great question. So on a daily basis, I like to follow the VIX and the VXN a lot, just to position myself as whether this is a market to be a buyer in, or whether this is a market to be trimming or selling. And again, trimming and selling mostly towards the swing trading side. Longer term positions I personally don't really care much about their day-to-day volatility. But this right here gives me a good estimate as to where I want a dollar cost average as well for the VIX and the VXN. And again, the last 3 spikes, well, I should say like 4 spikes, we've actually added stocks, right? We've actually added more shares to our positions coming in from like May 13th and 12th. This right here, we were buying when the VIX spiked over 87%. And again, I've actually had a label here that we're a buyer at these levels, at close to 29, 30 levels. The VIX spiked again, 58% back in July. We were a buyer here, and more recently we basically spiked another 64%, and we added some shares here as well. And if you take a look at the S&P 500, it's a very clear trend, right? It's just been pushing higher after being validated at the 50 EMA as well. So kind of a head and shoulder for Bitcoin as well. Yeah, there is. So this right here is like the massive head and shoulder as well. So we'll see how this all plays out in the future. All right, let's see. Quick poll. Time for a poll. We got about 7 minutes left for the markets to open. Green or red? Markets. All right, let's see. See how many votes we get and what people vote for. And in the meantime, we'll just set up our 4 5-minute charts. So Jason says yellow. That's great. I think yesterday, or no, a couple days ago, you were expecting pink, or I think it was like blue or something. So I think that was true. Oh, wait. I didn't even think about that. So, all right. Let me just do it again. I'm just going to do it again. Markets today. All right. We should be good now. I just said markets today, green or red. I didn't even realize. All right, so Neo, let's see. What color is your hair? Yes. All right, Tesla slightly up over 0.5%, so that's good. For Tesla, $700 is the support level. We're watching 700 very, very closely. And then we've got Palantir slightly up over 1.5%. We'll put AMD over here. We'll just kind of switch around between different stocks as well. Let's take a look at where AMC is trading. AMC slightly down about 27 basis points as well. So AMC has a really strong support at 40, right? So yesterday we basically pulled back over 8%. So, you know, yesterday we talked about AMC and we mentioned how this right here is a supply zone, I call it, or the supply area, like a resistance area. And the reason why this is so important is because every time we've kind of dipped inside this, we have seen the sellers step in, right? The activity kind of picks up. And if you take a look at the volume, you can very easily identify that as well. The last time you were in that area was like July 20th, right there. And look at the volume, right? It was much higher than the average 10-day volume. Look where we are now, and look at the volume, right? Once again, spiking. So there is supply, there is resistance at that area, right? Between $40 and $50. So if we can get a $40 support validated, then that would be very good on the day for AMC stock for a potential retest of 50 or even potentially even break out over that level. So $40 is going to be the support level to watch intraday, all the way as high as $50 as the next resistance. All right, let's take a look at Lucid. So Lucid is coming down to that support at close to $20.75, like around those levels. And then yes, we'll go over Apple, Mark, in just a second. So $20 is going to be the support for Lucid, and like I said, we're still consolidating sideways. I was actually going over their presentation as well. I think they are expecting deliveries by second half of 2021. They're like pushing forward with the production and the deliveries as well by the second half. So like this time around, they're going to be starting very, very soon. So that's really good for Lucid, right? That's the big sort of catalyst that needs to get the company going, and that is the catalyst related to deliveries, right? That's very important. That's what's generating revenue. That's what will really help the company moving forward. So $20 is going to be the support. But that being said, you know, $34 billion is still pretty pricey for me. I think it's still very expensive at these levels. And then of course, you know, this is all as a result of a huge momentum push of over 500% after the SPAC, and then basically came back down, right? So $20 is going to be the next support here. 29, 25, 30 is going to be the next resistance to watch. Take-Two Interactive. Let's see. So yes, SPRT is up 100%, 120%, so that's very, very strong. But yes, Joshua, I will be buying close to 151, so this at this previous support level for Take-Two Interactive. Just been a really strong downtrend here. But of course, in my opinion, strong overreaction after the earnings for the company as well. And the valuation is very attractive at these levels. It's not like it's super high, so it's very reasonable for the company. All right, so I'm gonna end the poll here. Wow, so 55% green, 45% basically red. So very, very interesting. Very interesting. So we're kind of like a split vote here. So we'll see what happens. By the way, Amazon was the only stock that was actually green yesterday. Did you guys even look at the markets yesterday? It was pretty brutal, right? I mean, I think it was like so many stocks. Let me just pull up the heat map for yesterday. And this right here was the heat map from yesterday, right? Look at just all the sectors, all the stocks. Just the stocks that were actually green was Salesforce, CRM, and Amazon slightly up. Netflix was a little bit. Activision, Blizzard, John Deere was slightly up. This right here in the real estate, EQIX was slightly in the green, but for the most part, the entire S&P 500. And this is the entire stock market in the US. This is not just the S&P. See all the stocks combined. Again, you'll notice that these small pockets that were slightly green, but everything else is completely got sold off pretty aggressively. And of course, Chinese stocks pulled back. Brazilian markets pulled back. You got the Canadian markets also dropping. So yesterday was a bit of a sell. Didn't really feel like a lot, but it was just across the board a lot of selling pressure. So again, all the sectors were basically down. All right, so Amazon 3,300 is going to be the next support. So we are pushing higher, up over 0.5% from yesterday pre-market. Let's take a look at SoFi. So SoFi is down a little bit yesterday, down 3.3%, but we're still kind of hovering around those levels, right? 14.30 is where we're trading pre-market. $13 is going to be the next support level, and we also have our strong bullish divergence here, positive divergence for SoFi as well. All right, the markets are about to open. Let's see where we are. The Nasdaq with just a 1 minute before dump here, and the S&P also pulling back, still up on the day. We're going to switch over to our actual indices. All right, we are live. We are open for the markets. There it is. There's the S&P 500 up over 21 basis points. The Dow is up over 19, and the Nasdaq just opened right there. We're up over 14 basis points as well. So Pinterest, let's see how Pinterest is doing. So pretty much flat on the day so far. Not really a lot of activity. 33 basis points. Let's do a quick scan of the markets. All right, so let's see what's actually moving. So we got ZIM. All right, let's start from the bottom here. All right, so we got Peloton down over 6%, trading as low as $107. That's a big move to the downside here. $102 is going to be the next support level here for Peloton to watch. Then moving forward, we got Novavax down about 90 basis points. We got Alibaba now down 3%, trading as low as $159 a share. So a lot of selling pressure coming in once again for this company. Futu is down over 1%, trading just under $99. Micron pretty much flat. Tattoo Shift pulling back after yesterday's sell-off, trading just over $19. SoFi pretty much flat once again, and a lot of stocks flat so far. Nvidia, look at that, 225, 232. Remember, 232 is the next resistance I'm watching for Nvidia. Closer around those levels, 232, 235. The speech is at 10 a.m. So in about 29 minutes is when the speech is really going to be happening. So that is going to be very interesting. So yeah, in about 52 minutes, in about 27 minutes, we've got the speech from Jerome Powell, and I will be live streaming that here. All right, let me see if I can find something here, because I know the Kansas City Fed is still here talking. They are live right now, but I just want to know if there's any central bankers talking right now. Yep, so nothing really going on. All right, so let's take a look at Autodesk. Autodesk just hovering over that 50 EMA, right? So we're up over 1.7%, 315, just over that 50 exponential moving average. So that's the level, to watch. $303. I will basically start a very small position at those levels, and then be a little bit more aggressive if it does come down to the 200 SMA. Ideally, $266 would be absolute ideal. In a perfect world, that would be ideal. 266, 20% move to the downside. Let's take a look at Visa. quick update on the markets here. So Tesla up over 64 basis points. We got Palantir moving back up to 25. AMD is also up over 1.5%, $108. The high for the day for AMD is $109. The resistance at 110. Resistance 110. So let's see if we actually break out over that resistance for a change, or if we just still keep getting rejected at that level. But this right here, NEO also pretty much flat on the day so far. And look at that, the Nasdaq up now 26 basis points, just under 15,000. And we got the S&P just up over 20 basis points, with the Dow also pushing higher, up over 19 basis points. So let's just switch over to the 5-minute charts, and then we'll look at different stocks. So Visa has been selling off. So this right here was kind of like a rising wedge pattern, so to speak, for Visa. So we just continue to push higher and higher, make these higher highs and higher lows before we actually broke below the 50 EMA as well. We're down about 9%. So the next support I'm watching for Visa is going to be at this 200 SMA, sitting roughly at 222. In my opinion, that's going to be a strong level to watch. And Visa and MasterCard in general were a little bit overpriced, in my opinion, right? Just based on the metrics. At the end of last month, we did a price to earnings, price to sales analysis on a lot of these companies. And 22 times sales is pretty high for Visa. So, just a multiple of revenue that it trades at is a pretty big number. All right, Peloton still down, Alibaba still down, Upstart pulling back, but not that much, down 70 basis points, still hovering over $215. David, thank you so much. I really, really appreciate that. So thank you so much for joining in. I hope you have a great day as well. I'll tune in for your evening videos. They're awesome. All right, perfect. Thank you, and have a great day. I want to re-enter AMD at 100. I don't want this to go up, not just yet. So yeah, AMD's got a support at around $99 to $100, right? That is going to be the level to watch for advanced micro devices. So 110 is going to be the next resistance, and of course $99 to $100. Look at the 50 EMA, right? Look at that yellow line you guys see on the chart, the 50 exponential moving average, literally just now sitting at $99. So it's now getting more aligned with that support, so that's good. So even if you do get that retreat for AMD, in my opinion, I'm confident that $99 to $100 is going to hold up as the next support level. The one thing that I've basically observed about AMD is that it moves in like cycles, right? It has a flat month, flat year, and then it basically breaks out a huge resistance, and then again consolidates for a long time. So same time last year, back in August to July, it rallied 76%, then a year of consolidation, and then another 70% jump. I'm not saying that we're going to see another year worth of consolidation, but there has to be some significant catalysts coming up for it to make sense, for it to break out even further. So Kunal, thank you so much. I really, really appreciate that. You impact so many of us with your support moving forward. Yeah, I know. Do say that a lot. But yeah, definitely. That's gonna be part of the merch, right? It's gonna say right there moving forward. What is your opinion of Monish buying heavy into Alibaba? I mean, I think it's a smart move over the long term. Again, if you are okay with the volatility, if you can weather the risk, it's undervalued without a doubt. Alibaba's valuation is very, very attractive. And just based on the prices that it trades at, it's very appealing at that valuation for Alibaba. So I think it's a strong decision here. So why there's a valuation difference between Upstart and SoFi, as both of them have the same business? They don't quite have the same business. Upstart is more in the lending space. SoFi offers a lot of other different products and services other than just lending. So I wouldn't say they're in the same sector. Like, they're probably in the same sector of fintech, but they're not operating in the same business, right? So of course margins are different, multiples are different, and of course with today's businesses getting more and more complicated, it's not like traditional metrics will play out. Like, you can't just we can't value each company the same way like we used to do, like put them all in the same sector and just put a same handle or same multiple price to earnings, price to sales, and expect one of them to be undervalued versus another. But they just have so many different metrics that they report on: users, average revenue per user, different types of like total payment volume, total transaction volume, and of course Upstart reports like total loans underwritten in terms of volume. So there's a lot of different metrics to look at to basically understand how the business is doing. All right, so what is pushing higher? Look at Palantir, up over 2%, really pushing higher here. AMD, of course, not a surprise, getting rejected at 110. Let's take a look at Amazon. So Amazon still up over 28 basis points here, just pushing past over 33.25. Let's take a look at Apple. Apple slightly down. Tesla also finding a little bit of sellers here, and so is NIO. But the S&P continues to push higher. So some of the SPY holdings here, we got Exxon, Chevron, we got Carnival Cruise, we got Norwegian, we got Netflix pushing higher to 557. So Netflix has a resistance at 557 here. So it's up over 1.4%, hitting resistance at the moment. $557 is the level to watch for Netflix. Then we got Delta, we got Royal Caribbean, all pushing higher. American Airlines. So yes, airline stocks are up quite a bit. Corsair Gaming, let's take a quick look. So Corsair is still up over 81 basis points on day, but yeah, it's just been selling off quite a bit. $26 to support, $28.50, $29 is going to be the next resistance to watch for Corsair. Pinterest, let's see. Not quite moving here. Pinterest is up. Yep, it is up, not by a lot though. It's just flat so far on the day. And then Mara is up another 2.3%. Mara's been holding up pretty nicely, right? Even though Bitcoin prices have come down. You know, Bitcoin's down over 8% almost from its recent highs. Mara stock has pretty much held up really, really nicely. Caddy, the markets have been down for more than 6 months now. Do you think it's ever going to recover? If so, by when do you think we can reach February levels? ET, which market are you referring to? Like which markets have been down for 6 months? Which are you talking about, like different commodities or like different, like, yeah, what market are you referring to? Are you talking about the stock market? Stocks? Well, stocks have been just hitting new highs. Yeah, I mean but yeah, I mean the S&P 500 has just been pushing higher, right? It's just been hitting new all-time highs, and so is the Nasdaq. It's just been on a new all-time high pretty much almost every day. So, all right, let's see. We got about 20 minutes left. We're gonna do like quick analysis on certain stocks. So just shout them out. I'm gonna go over very, very quickly. Maybe spend like 10-15 seconds on it, and then if any stocks are basically going up, we'll go over that as well. But very quickly, we're just gonna talk about. All right, let's take a look at AI. This stock has been beaten down expensive right now in terms of valuations. I'm watching this very closely. I've got my alert set up, but very, very interested in this one. But it's a little bit overpriced. $46, $47 is going to be the next support level to watch for this one. And the resistance is going to be at closer to $58.80. All right, let's take a look at Etsy. Etsy, you better not be up today. All right, so it's down about 94 basis points. So this 210 level is a resistance, right? So yesterday's high was actually $212, $214. And today, even today, we breached 210. We got up to as $212. But this right here is the next resistance at $210. We're just getting rejected at that level. We've gone rejected at that level in the past as well. The RSI not quite overbought yet, but I would like to own more Etsy stock, but it just keeps pushing higher right now. Let's take a look at Coinbase. So Coin, also pretty much trading sideways at the moment. And one of the things that I do want to identify for this now is the fact that we may be making some higher highs and higher lows here for Coinbase, right? So this is a good pattern that we are following. So if I were to remove, like, just if you were to take a look at this pattern here, right? We've just been making these higher highs, higher lows, higher highs, higher lows. So higher highs would next be $302. That is going to be the next target if Coinbase actually does break out, and of course it's highly dependent on Bitcoin prices as well. So let's take a look at JWN, so Nordstrom. This stock has just been selling off, but it looks like they're bouncing off of that second support level at close to $28. So yesterday, well, a couple days ago, whenever they announced their earnings, they were down over 17%. We talked about how $30 is going to be the first support level, but we need to be careful because the selling pressure was strong. So I identified the next second support level at close to $28, $29, because that was previously acting as a support coming in from December 2020. And we sold off even further down to that level. Yesterday we were down over 8%. Today it feels like we're bouncing off that level. So the selling pressure is now starting to stabilize a little bit, right? So now if it continues to consolidate here, that could be an opportunity to kind of accumulate more shares of Nordstrom. Again, considering that you've done the research and due diligence on this as well. So it's going to be very, very important to watch that level as well. All right, so let's take a look at, all right, so we already went over Alibaba, we went over, so let's take a look at Microsoft. So Microsoft now starting to pull back here. $290 is going to be the next support level that we're watching. All the way as low as 283, right? So 2 support levels to watch there. Resistance stays put at $305. So that right there is going to be the level to watch. So Martin, Fed as in like the Fed, or Fed as in the stock? Oh, you mean Fed in 17 minutes. Yes, so 17 minutes. Raul, so Powell's live speech is going to be starting in about 16 minutes here. So very, very soon at 10 a.m. Eastern. We'll go over that. We'll listen in. I'm going to be taking some notes. I will probably close the webcam, but I will be showing that to you guys. So like it'll be live streaming, and then I'll be taking notes as well. Rahul, Jesus, you asked me that question like 4 times in the last like 2 seconds. All right, I'm sorry here. All right. Perfect. Let's take a look at Upwork. So Upwork, just $40 is going to be the next support level. This is also, a very good example of how the selling pressure basically got exhausted after tremendous amount of just selling day in and day out. And this right here was a drop of 38%. What we really want to see when the stocks are selling off that aggressively, of course, there's a concept of basically you don't want to catch a falling knife. So you just want to make sure that you allow the stock to stabilize a little bit, right? So you just want that first green day after a round of red days. So what happens is, Upwork, red. That first green day happens. That's a good sign. That's a sign that the buyers really stepped in on that day, and we saw some type of buying momentum. The following day we pushed up. That's even better. So you're seeing a little bit of recovery. So you let the selling pressure exhaust, right? So you wait for that first green day. So for Nordstrom, it's a great example. So it's been selling off. If today ends up green, that's a good sign that the buyers stepped in on the day. The RSI is really oversold. The MACD is really oversold. So it may be an opportunity to start thinking about Nordstrom at these levels. So, all right, let's take a look at gold now. So gold at 1790 levels, just under $1,800 per ounce. Pretty much flat so far. This right here is a support. We've just been getting rejected at the 200 simple moving average for gold the last 3 times. You'll notice that we've just been hitting that resistance here, and then basically got rejected for the second time as well. So 1760 is going to be the support here, all the way as 1950 is the resistance. We've just been getting rejected at that level twice in the past as well. Stocks such as NIO, Tesla, Palantir, they haven't reached their February levels. This is what I meant. Oh, okay. So you mean like specific stocks? Okay, gotcha. So for those ones, that's actually a great question. It really depends on the valuation for those companies. As I've mentioned again, Tesla, Palantir, those are great companies, but the real question is, what are they worth today versus what are they worth in the future, right? For Tesla, there's a significant debate. Of course, there's an argument. It's debatable that you can make that Tesla's valuation right now is pricing in some of the best scenarios 5 years out, 10 years out, right? So for it to grow, all those need to actually happen, and then the market is going to start pricing in new information, and the valuation is going to grow even further. So what really happened is the market cap basically spiked, right? In the last year, it's gone up over 1,000%, and now it's kind of settled down, right? It's stabilized a little bit, starting to move sideways, and now the fundamentals are catching up to the valuation, right? The valuation's kind of stabilized a little bit, 600, 700 billion. And now the fundamentals are catching up as the revenue improves, as the delivery improves, as new models come out, as Tesla continues to sort of tap into the energy market as well. And same with Palantir as well, right? The valuation seems a little bit of a stretch here at those prices, but long-term growth potential is a lot for these companies. So that's what the market is pricing in. But in the short term right now, like at least going into like this year, going into next year, I wouldn't be surprised to see some like sideways trading, right? Consolidation for some time before we get that next round of momentum to the upside for these companies. All right, so we got the Dow up over 33 basis points. We got S&P 500 up over 33 as well, and we got the Nasdaq up over 23 basis points. The VIX coming down over 6% at the moment. So we already covered Peloton, but we are still down. Well, Peloton kind of bounced off of 102, right? So 102.60 was a support level that we were actually talking about. And you'll notice that $102.91 was the low for the day. So we basically came down, tagged that level, and the buyer stepped in to push us back over. So that would be the next support here. Let's take a look at PayPal. PayPal's got a really tight range that it's trading in. So this right here is the tight range within which it's just been consolidating. $279, $208 resistance, and we got a support at $269, $270 a share. So just a really tight range. This could be seen as some type of a bear flag, because if you take a look at this pattern, we were just selling off, then we started trading sideways, and usually, I mean, this could result in a breakdown even further. And if it does, the next support I'm watching is going to be at 254, right? So right around this level, the 200 SMA at $254 for PayPal. So I've not done a fundamental analysis on Peloton. Actually, that's a good idea. I'm going to add this to the watch list. Well, actually, it already is. But I will be doing analysis on Peloton as well. I'm going to be doing some analysis on Starbucks. Then I think a couple of recommendations from you guys were Starbucks, SoFi, of course. Then I'll add, what's its name? What's the company name that I was just talking about? Peloton. We'll be talking about that as well. All right, let me check if there's any update on the news here. All right, nothing yet. All right, Apple, let's take a quick look for Jake. So Apple is pulling back. There's no surprise, right? Apple's, it's just been pushing higher, 2.5 trillion market cap company, significant growth over the past year. So 150 is a resistance, we talked about in our previous market update. So yesterday's market update, 150 was a resistance. 145 is the next support. So again, in the near term, I wouldn't be surprised to see us pull back a little bit more. And then get more aligned with that 50 exponential moving average as well. So all right, let's take a look at Fiverr for Ismar. Let's see how Fiverr is doing. 27 basis points. This stock has such a strong resistance. I strongly believe that this is going to be like an upstart type of breakout for this company as well, because I can't even, we were talking about upstart for so long, and it had a resistance at 134.50 for such a long time, until it finally broke out and the volume spiked and it just basically rallied. This right here was the breakout day. So right here on August 10th, you'll notice the volume, right? Just take a look at the volume. The volume and that day spiked right after that breakout. Huge momentum to the side, and just we rallied over like 60-70%. So if you take a look at Fiverr right now, we've got a strong resistance at 180, right? $180 is a really strong resistance for Fiverr. Like the last 4 times that we've tested that level, there's been sellers present. So there is certainly some supply at this $180 level. But if you can get that breakout, like even today, 179.42, and we're already starting to see selling pressure. So if you get that breakout from Fiverr, then very quickly we could be to highs of 200 or even further higher, just considering how oversold this stock is. And we're starting to see that recovery back up. So we'll see how it plays out. Ideally, I would like to kind of acquire more at close to 150 or even as low as 128 for the company. Right now, I've got like a really, really small position in this at the moment. All right, let's take a look at Upstart. We already went over. PayPal we went over. Fiverr we went over. Let's take a look at Xpeng, and then we'll go over to CRM. So Xpeng feels like it's just mixing like a lower high here, and also feels like it's making some type of a higher low at the moment. So we do have some type of a triangle. I can't really make out whether it's a descending triangle or like a symmetrical triangle, but we do have something kind of brewing in that could lead to like further moves, much bigger moves for Xpeng as well. Actually, we didn't actually break down their earnings from yesterday. Let me just do that very quickly. So XPeng, Chinese electric vehicle maker, on Thursday reported second quarter adjusted loss of 21 cents per share, narrower than the $4.24 renminbi. So that's a huge drop. Analysts polled were expecting about $1.60, so they came in much better than the expectations. The revenue came in at 3.776 billion, up from 590 million. That's very, very strong. And looking at it, the company said it expects revenue in the range of 4.8 to 5 billion in the third quarter. So we got an analyst beat when it comes to EPS. We also got a revenue beat, and we got strong future guidance as well. So all four were hit. It was up before the market turned, unfortunately, and then it basically turned negative. So, we'll see how it kind of all plays out. But support level to watch at close to $37.50, right? That right there is going to be the level to watch for XPeng. So very, very strong support here, and then lower highs, of course, catching up on XPeng. Let's take a look at Moderna, mRNA. See how that stock is doing. So again, we got about 6 minutes left. In about 5 minutes or so, I will again check the audio and the video just to make sure that everything is working, and then we'll just listen in on that. And then also, I'm just going to take some notes. I'll probably turn off the webcam for a little bit and then just take some notes, and then after it's over, come back on. So Visa we already went over as well. But Moderna seems to be down over 3%. The 50 EMA is going to be the next level to watch here. Let me just see something. If I were to bring out the 9 EMA, where does that sit? Alright, 9 is not quite there. You work out 21. 21, alright, so 21 is going to be important as well. For Moderna, I feel like it's just been kind of hovering around those support levels, so we're just right above that 21 exponential moving average. In the past, you'll notice that we actually validated that level here, coming in from June 16, 17, before we saw that breakout and tremendous divergence here as well from the moving averages. Alright, let's take a look at Baidu. So Baidu slightly down. 151 is going to be the next support here. 151, 152 is going to be the support level to watch for Baidu stock. Alright, so that's going to be the level to watch here. Still getting rejected here. Again, no surprise because Alibaba is also down. But overall, the market seems to be doing rather good. Overall market is. Some of the individual stocks may not be. So NIO is now down almost 90 basis points. And then we got Tesla also up over 0.5%. Palantir really pushing higher, 2.8% on the day. Alright, let's listen in on... So Mohammed, I have not quite opened the position in Alibaba, just waiting at the moment. Alright, so we got about 4 minutes left. 4 minutes till the speech. And again, excited to see what Jerome Powell has to say. Let's take a look at ExxonMobil. So ExxonMobil also had kind of like this rising wedge pattern. It was just making these higher highs and the higher lows before we saw that breakdown. And this is as a result of oil prices also coming down. So, of course, the drilling business of Exxon Chevron really depends on oil prices. So as that basically comes down, we saw Exxon also pull back. But that being said, we're kind of bouncing off of that 200 simple moving average. Kathy, do you follow Tom Lee from Fundstrat? Yeah, I do. The only thing is that every time I listen to his calls, they're always bullish. They're like he's always expecting a huge rally in the markets for like weeks to come. So that is always interesting to kind of read up on. But he's been very accurate as well. He's been on point for a long time. So next resistance to watch for Exxon is going to be that $57.50 level. So that's the 50 exponential moving average to watch very, very closely for ExxonMobil. All right, let's take a look at CRM. CRM we already actually we didn't go over CRM. So CRM had higher highs and higher lows, right? This right here was the resistance that we were talking about in our yesterday's live stream. We basically mentioned how there was lower highs and lower lows here. So you'll notice that we were just selling off, lower highs, lower lows, just pulling back. And then the trend shifted, right? We basically started pushing higher. So this right here, the higher highs and higher lows. And what we're really testing right now is the actual higher highs inside this uptrending pattern. We got the RSI overbought, we got the MACD overbought. So I wouldn't be surprised to see a little bit of a pullback here on Salesforce as well, because we got a small gap here, so minor gap that can potentially also get filled. And we got a support at close to 250 for Salesforce. So that's going to be the level to watch. All right, so my quick take on before Powell jumps on, I'm not expecting like a huge policy change from Powell. What I'm really expecting is his take. What I'm really interested in is his opinion and analysis of the current state of the economy. Right? I want to hear what he has to say about unemployment. I want to hear what he has to say about inflation. He may not even mention tapering. He may talk about the interest rates a little bit, but there's not going to be any definitive policy change, at least not in my opinion, yet, right? But we also want specific details. I want him to communicate well, because the last thing we want is uncertainty in the markets, right? If he communicates well with the market, I think that's what the market is going to reward him for, because we need a clear timeline as to when things are going to happen. So again, I'm just going to put this on, just make sure that you guys can hear this and see this, and we should be good here. I'm actually not going to play the music, because right now they're playing the music, because last time I did that, YouTube just somehow sees that as being copyright. So I'm just going to start when it actually starts. So Steve, welcome on board. No, you did not miss anything. We're about to start in about 35-40 seconds whenever this thing starts. And what I'll do is I'll keep the markets here. So the NASDAQ is going to be over here. We've got the S&P 500 on this side. The Dow, you should be able to see the Dow as well. But this right here at the top left is where the screen is going to be. So, all right, let's see when it actually starts. Dave, welcome on board. Right on time. Oh, what? Look at... That was a big pullback on the S&P here. All right, let me know you guys can hear this.
President of the Federal Reserve Bank of Kansas City. In late August each year since 1982, the Kansas City Fed has been honored to welcome central bankers, policymakers, academics, and others to Jackson Hole, Wyoming for our Economic Policy Symposium. After hosting a virtual conference last year, it was our hope that we could convene in person this week, and that seemed a reasonable plan before local health conditions changed. I regret the inconvenience of this last-minute pivot to a virtual format and want to express my thanks to our partners at the Jackson Lake Lodge and many others in the Jackson Hole area for working with us for months to make preparations and accommodations. So virtually, we will open the program today with our first speaker, Fed Chairman Jay Powell, whose remarks will be broadcast to the public. Following that, the remainder of the program, titled Macroeconomic Policy in an Uneven Economy, will continue for invited guests. As always, the full agenda and each of the papers presented will be posted at our public website, kansascityfed.org, and a transcript of the symposium will be made available after the event. Now, it's my distinct honor to welcome Federal Reserve Chairman Jay Powell. Chairman Powell, I want to thank you for your flexibility in these circumstances. The virtual floor is yours.
Thank you, Esther, and good morning. 17 months have passed since the U.S. economy faced the full force of the COVID-19 pandemic. This shock led to an immediate and unprecedented decline, as large parts of the economy were shuttered to contain the spread of the disease. The path of recovery has been a difficult one, and a good place to begin is by thanking those on the front line fighting the pandemic. The essential workers who kept the economy going, those who have cared for others in need, and those in medical research, business, and government who came together to discover, produce, and widely distribute effective vaccines in record time. We should also keep in our thoughts those who have lost their lives from COVID, as well as their loved ones. Strong policy support has fueled a vigorous but uneven recovery, one that is, in many respects, historically anomalous. In a reversal of typical patterns in a downturn, aggregate personal income rose rather than fell, and households massively shifted their spending from services to manufactured goods. Booming demand for goods and the strength and speed of the reopening have led to shortages and bottlenecks, leaving the COVID-constrained supply side unable to keep up. The result has been elevated inflation in durable goods, a sector that has experienced an annual inflation rate well below zero over the past quarter century. Labor market conditions are improving but turbulent, and the pandemic continues to threaten not only health and life, but also economic activity. Many other advanced economies are experiencing similarly unusual conditions. In my comments today, I will focus on the Fed's efforts to promote our maximum employment and price stability goals amid this upheaval, and suggest how lessons from history and a careful focus on incoming data and the evolving risks offer useful guidance for today's unique monetary policy challenges. The pandemic recession, the briefest yet deepest on record, displaced roughly 30 million workers in the space of 2 months. The decline in output in the second quarter of 2020 was twice the full decline during the Great Recession. But the pace of the recovery has exceeded expectations, with output surpassing its previous peak after only 4 quarters, less than half the time required following the Great Recession. As is typically the case, the recovery in employment has lagged that in output. Nonetheless, employment gains have also come faster than expected. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower wage workers in the service sector and on African Americans and Hispanics. The unevenness of the recovery can further be seen through the lens of the sectoral shift of spending into goods, particularly durable goods such as appliances, furniture, and cars, and away from services, particularly in-person services in areas such as travel and leisure. As the pandemic struck, restaurant meals fell 45%, air travel 95%, and dentist visits 65%. Even today, with overall GDP and consumption spending more than fully recovered, services spending remains about 7% below trend. Total employment is now 6 million below its February 2020 level, and 5 million of that shortfall is in the still depressed service sector. In contrast, spending on durable goods has boomed since the start of the recovery and is now running about 20% above the pre-pandemic level. With demand outstripping pandemic-afflicted supply, rising durables prices are a principal factor lifting inflation well above our 2% objective. Given the ongoing upheaval in the economy, some strains and surprises are inevitable. The job of monetary policy is to promote maximum employment and price stability as the economy works through this challenging period. I'll turn now to a discussion of progress toward those goals. The outlook for the labor market has brightened considerably in recent months. After faltering last winter, job gains have risen steadily over the course of this year and now average 832,000 over the past 3 months, of which almost 800,000 have been in services. The pace of total hiring is faster than at any time in the recorded data before the pandemic. The levels of job openings and quits are at record highs, and employers report that they cannot fill jobs fast enough to meet returning demand. These favorable conditions for job seekers should help the economy cover the considerable remaining ground to reach maximum employment. The unemployment rate has declined to 5.4%, a post-pandemic low, but is still much too high, and the reported rate understates the amount of labor market slack. Long-term unemployment remains elevated, and the recovery in labor force participation has lagged well behind the rest of the labor market, as it has in past recoveries. With vaccinations rising, schools reopening, and enhanced unemployment benefits ending, some factors that may be holding back job seekers are likely fading. While the Delta variant presents a near-term risk, the prospects are good for continued progress toward maximum employment. The rapid reopening of the economy has brought a sharp run-up in inflation. Over the 12 months through July, measures of headline and core PCE inflation have run at 4.2% and 3.6% respectively, well above our 2% longer run objective. Businesses and consumers widely report upward pressure on prices and wages. Inflation at these levels is, of course, a cause for concern. But that concern is tempered by a number of factors that suggest that these elevated readings are likely to prove temporary. This assessment is a critical and ongoing one, and we are carefully monitoring incoming data. The dynamics of inflation are complex, and we assess the inflation outlook from a number of different perspectives, as I will now discuss. The spike in inflation is so far largely the product of a relatively narrow group of goods and services that have been directly affected by the pandemic and the reopening of the economy. Durable goods alone contributed about 1% to the latest 12-month measures of headline and core inflation. Energy prices, which rebounded with the strong recovery, added another 0.8% to headline inflation. And from long experience, we expect the inflation effects of these increases to be transitory. In addition, some prices, for example, for hotel rooms and airplane tickets, declined sharply during the recession and have now moved back up close to pre-pandemic levels. The 12-month window we use in computing inflation now captures the rebound in prices, but not the initial decline, temporarily elevating reported inflation. These effects, which are adding a few tenths to measured inflation, should wash out over time. We consult a range of measures meant to capture whether price increases for particular items are spilling over into broad-based inflation. These include trimmed mean measures and measures excluding durables and computed from just before the pandemic. These measures generally show inflation at or close to our 2% longer run objective. We would be concerned at signs that inflationary pressures were spreading more broadly through the economy. We are also directly monitoring the prices of particular goods and services most affected by the pandemic and the reopening, and are beginning to see a moderation in some cases as shortages ease. Used car prices, for example, appear to have stabilized. Indeed, some price indicators are beginning to fall. If that continues, as many analysts predict, then used car prices will soon be pulling measured inflation down, as they did for much of the past decade. This same dynamic of upward inflation pressure dissipating and in some cases reversing seems likely to play out in durables more generally. Over the 25 years preceding the pandemic, durables prices actually declined, with inflation averaging negative 1.9% per year. As supply problems have begun to resolve, inflation in durable goods other than autos has now slowed and may be starting to fall. It seems unlikely that durables inflation will continue to contribute importantly over time to overall inflation. We will be looking for evidence that supports or undercuts that expectation. We also assess whether wage increases are consistent with our 2% inflation goal over time. Wage increases are essential to support a rising standard of living and are generally, of course, a welcome development. But if wage increases were to move materially and persistently above the levels of productivity gains and inflation, businesses would likely pass those increases on to customers, a process that could become the sort of wage price spiral seen at times in the past. Today, we see little evidence of wage increases that might threaten excessive inflation. Broad-based measures of wages that adjust for compositional changes in the labor force, such as the Employment Cost Index and the Atlanta Wage Growth Tracker, show wages moving up at a pace that appears consistent with our longer-term inflation objective. We will continue to monitor this carefully. Policymakers and analysts generally believe that as long as longer-term inflation expectations remain anchored, policy can and should look through temporary swings in inflation. Our monetary policy framework emphasizes that anchoring longer-term expectations at 2% is important for both maximum employment and price stability. We carefully monitor a wide range of indicators of longer-term inflation expectations. These measures today are at levels broadly consistent with our 2% objective. Because measures of inflation expectations are individually noisy, we also focus on common patterns across the measures. One approach to summarizing these patterns is the board staff's Index of Common Inflation Expectations, which combines information from a broad range of survey and market-based measures. This index captures a general move down in expectations starting around 2014, a time when inflation was running persistently below 2%. More recently, the index shows a welcome reversal of that decline and is now at levels more consistent with our 2% objective. Longer-term inflation expectations have moved much less than actual inflation or near-term expectations, suggesting that households, businesses, and market participants also believe that current high inflation readings are likely to prove transitory, and that in any case, the Fed will keep inflation close to our 2% objective over time. Finally, it is worth noting that since the 1990s, inflation in many advanced economies has run somewhat below 2%, even in good times. The pattern of low inflation likely reflects sustained disinflationary forces, including technology, globalization, and perhaps demographic factors, as well as a stronger and more successful commitment by central banks to maintain price stability. In the United States, unemployment ran below 4% for about 2 years before the pandemic, while inflation ran at or below 2%. Wages did move up across the income spectrum, a welcome development, but not by enough to lift price inflation consistently to 2%. While the underlying global disinflationary factors are likely to evolve over time, there is little reason to think that they have suddenly reversed or abated. It seems more likely that they will continue to weigh on inflation as the pandemic passes into history. We will continue to monitor incoming inflation data against each of these assessments. To sum up, the baseline outlook is for continued progress toward maximum employment, with inflation returning to levels consistent with our goal of inflation averaging 2% over time. Let me now turn to how the baseline outlook and the associated risks and uncertainties figure in our monetary policy making. The period from 1950 through the early 1980s provides two important lessons for managing the risks and uncertainties we face today. The early days of stabilization policy in the 1950s taught monetary policymakers not to attempt to offset what are likely to be temporary fluctuations in inflation. Indeed, responding may do more harm than good, particularly in an era where policy rates are much closer to the effective lower bound even in good times. The main influence of monetary policy on inflation can come after a lag of a year or more. If a central bank tightens policy in response to factors that turn out to be temporary, the main policy effects are likely to arrive after the need has passed. The ill-timed policy move unnecessarily slows hiring and other economic activity and pushes inflation lower than desired. Today, with substantial slack remaining in the labor market and the pandemic continuing, such a mistake could be particularly harmful. We know that extended periods of unemployment can mean lasting harm to workers and to the productive capacity of the economy. History also teaches, however, that central banks cannot take for granted that inflation due to transitory factors will fade. The 1970s saw 2 periods in which there were large increases in energy and food prices, raising headline inflation for a time. But when the direct effects on headline inflation eased, core inflation continued to run persistently higher than before. One likely contributing factor was that the public had come to generally expect higher inflation. One reason why we now monitor inflation expectations so carefully. Central banks have always faced the problem of distinguishing transitory inflation spikes from more troublesome developments, and it is sometimes difficult to do so with confidence in real time. At such times, there is no substitute for a careful focus on incoming data and evolving risks. If sustained higher inflation were to become a serious concern, the FOMC would certainly respond and use our tools to assure that inflation runs at levels that are consistent with our goal. Incoming data should provide more evidence that some of the supply-demand imbalances are improving, and more evidence of a continued moderation in inflation, particularly in goods and service prices that have been most affected by the pandemic. We also expect to see continued strong job creation, and we'll be learning more about the Delta variant's effects. For now, I believe that policy is well positioned. As always, we are prepared to adjust policy as appropriate to achieve our goals. That brings me to a concluding word on the path ahead for monetary policy. The committee remains steadfast in our oft-expressed commitment to support the economy for as long as is needed to achieve a full recovery. The changes we made last year to our monetary policy framework are well suited to address today's challenges. We have said that we would continue our asset purchases at the current pace until we see substantial further progress toward our maximum employment and price stability goals, measured since last December when we first articulated this guidance. My view is that the substantial further progress test has been met for inflation. There has also been clear progress toward maximum employment. At the FOMC's recent July meeting, I was of the view, as were most participants, that if the economy evolved broadly as anticipated, it could be appropriate to start reducing the pace of asset purchases this year. The intervening month has brought more progress in the form of a strong employment report for July, but also the further spread of the Delta variant. We will be carefully assessing incoming data and the evolving risks. Even after our asset purchases end, our elevated holdings of longer-term securities will continue to support accommodative financial conditions. The timing and pace of the coming reduction in asset purchases will not be intended to carry a direct signal regarding the timing of interest rate liftoff, for which we have articulated a different and substantially more stringent test. We have said that we will continue to hold the target range for the federal funds rate at its current level until the economy reaches conditions consistent with maximum employment and inflation has reached 2% and is on track to moderately exceed 2% for some time. We have much ground to cover to reach maximum employment, and time will tell whether we have reached 2% inflation on a sustainable basis. These are challenging times for the public we serve, as the pandemic and its unprecedented toll on health and economic activity linger. But I will end on a positive note. Before the pandemic, we all saw the extraordinary benefits that a strong labor market can deliver to our society. Despite today's challenges, the economy is on a path to just such a labor market, with high levels of employment and participation, broadly shared wage gains, and inflation running close to our price stability goal. Thank you very much.
What's up, everyone? So you guys can hear me, right? Just let me know if you guys can hear me. But the market's really just hitting a new all-time high right now. The Nasdaq is way above 15,000. I mean, we started with lows of 14,966. We've basically climbed over 100 points since he basically started talking. Like literally over 122 points we've climbed since we basically started this this live stream. This right here, of course, the S&P 500 as well started from 44.75. We're up another 50 points or so, 25 points, hitting new all-time highs here. So basically what he mentioned for the most part is basically reiterated how the employment has improved. The labor market, we averaged about 830,000 jobs over the last 3 months. Inflation, he reiterated that those are some of the temporary things that are causing inflation to go up. So CPI running 5.4% is basically as a result of airlines, hotels. We got specific things related to used cars that were pushing higher, but now we're seeing a little bit of a pushback down. So nothing new there. But the new part was basically towards the end. Of course, they are going to be very accommodative, supportive of monetary policy and quantitative easing for as long as it's going to take for the economy to recover fully. The new Delta variant is a little bit of a uncertainty and a question mark for the Fed right now, but they have basically met the first step, that is substantial further progresses. That's what he mentioned. They've basically met that target, and they are considering, is what he mentioned. Again, we've got an FOMC meeting in September. I think that's going to provide us some more clarity, but he is of the view that most of the members are expecting some type of tapering to begin this year, right? So that's very, very important. And surprisingly, the markets didn't shrug off any of the gains after he said that. We're still pushing higher. But another thing he mentions is that interest rates, it's going to be a step-by-step process like I've talked about before, and how first things first, substantial further progress. So that is step one that's been met. So we are literally at step one right now. Step two is now going to be starting tapering soon. My expectations now are basically moving up the ladder just by the end of this year. Potentially we should hear something about a timeline as to when they're going to start. But I know it was like towards the very end, he did not want it to bring this up. It was like, you know, we wanted to move up, we wanted to like push higher, and then towards the end, we're already up so much for us to, even if we do see a pullback from the markets right now, it's probably not going to put us down all that much. So Tesla, $710. We got AMD at Apple at 148, so a full recovery there. Let's take a look at AMD. Also at $111, and Palantir also pushing higher, up over 4% on the day. So strong move to the upside. I'm going to be doing a separate video going over the entire summary on what to watch, and of course what he basically said. It's going to be about 9-10 minute video. I'll go over everything that you guys need to know and some of the important parts as well. But one last thing he mentioned was that tapering and interest rate liftoff is not going to happen at the same time. It's going to be the first things first. Asset purchases are going to wind down a little bit, and then they're going to move over to interest rates. That is going to be a long ways away until inflation basically gets anchored at around 2%. That's their long-term average. So remember, employment, you have to tie employment with tapering, and we have to tie inflation with interest rates. Those are two separate things, right? So even if the employment is getting better, we're not necessarily going to raise interest rates. Interest rates, as far as I understand it, it's going to be completely dependent on where inflation sets moving forward. And the tapering is going to completely be as a result of the substantial further progress and the employment reports that are coming out. According to them, that number has been met moving forward as well. So I'm going to end the live stream here, but thank you so much for joining in. The market's just on a complete roar, continue to push higher here. But yeah, strong new all-time highs for the S&P and the Nasdaq as well, and overall the stocks basically pushing higher, and you know, just a really solid green day so far into the day. We'll see how we actually end up. Mara breaking out over $39, up over 7% on the day as well. So thank you so much for joining in. After this one, I will be putting out a summarized video going over exactly point by point what he said, so that we have a separate video for that you guys can check out for between 8 to 10 minutes. So thank you so much for watching. Make sure that you guys check out the Patreon and the Webull link down in the description below if you want to join our private Discord and get access to our private live streams, real-time updates and alerts, and a lot of other stuff as well. Again, thank you so much for joining in. I really appreciate it. Hope you guys enjoyed it. And if you did, please make sure to drop a like. It really helps out the channel. So I hope you guys have a fantastic green day now. And as always, happy investing. I will see you guys in the next live stream.